Hey everybody, welcome back to Ryan Makes Sense. Today we are reviewing another viewer requested video. This is AGNC Investment Corp, ticker symbol AGNC. I don't believe I have formally reviewed this one, but I think I have a memory in my brain of when I had it in a video and then someone got upset because it has only ever gone down, if I'm thinking of the same company. But we're going to go ahead and review this, look at the financials, look at the dividend, look at the what institutions and what hedge funds are doing, and just see what we can find out. So let's go ahead and hit the subscribe button and jump on in. All right, we're looking at the monthly. I thought we were on the daily, and it looks. I'm going to open it up on this too. Think or swing, baby. I have charted this one, and it actually is coming to a break point here. So let's just a couple things. 36.77 was the all-time high. Could you imagine buying it in the 36s and then seeing it go down for the next 12, 13 years? Okay, I'm almost there. We're just going to do that down to 625. And we're going to adjust this to be 36.77. Okay, so what I want to do is I want to establish how well these candles are respecting the Fibonacci, because it could help us make a decision on the upswing. But right here on our outer candle, you can see this is perfect support. Let me zoom in. I'm sorry. Let's do a little zoom, zoom, zoom. My head is not really in the way. Okay, so perfect support, almost perfect resistance, perfect resistance. Great support, kind of mishmashing. Perfect. Look at that cute little right on the dot. Again, perfect rejection, perfect rejection. Come down to our middle ring. Looks like it established resistance, perfect resistance kissed. We're now going down into this area here. And I do have this. I'm just going to change the color of this so we don't get it twisted. Oh man, these are all individuals. Crud. Well, okay. I'm gonna change the inner ring here. Blue. We're gonna make the inner ring blue, blue, blue. There we go. We can see it better now. Okay, now we're on our very inner ring right here. Almost good, perfect support, perfect resistance, perfect resistance. That's a double right there. Perfect. Now we're on the opposite side of our Fibonacci arc over here. Let's see how well it is respecting or not respecting. I mean, for a stock that's going sideways, that's pretty perfect right here. It stops before it gets too headed up, and then this candle, perfect support right here, and this is only going sideways. And we're gonna go ahead and we got a couple ways we can slice and dice this. So let's do. We'll do there. You're asking why did I choose that out of everywhere? Well, I'm right there. So it's a little off, but you can see perfect support, support established, support established, support established, resistance established, support, perfect support, resistance, resistance, resistance. And then this bottom line here, this stock has never fallen below and closed this line. Our next area of interest is right here. This is our apex. It's either going to reject down or strong move up. Looking at our volume over here, it looks kind of like it's tapering off, but we'll look at the fundamentals here. Okay. So RSI's midline momentum looks like it is just kind of coasting flat. Money flow, we're going to look and see what institutions and hedge funds are doing here. Are they loving it here? Are they hating it? Are they buying or selling? We'll get there. Money flow looks like it is going up. Relative momentum indicator, it's at the very bottom of the barrel. If this stock wanted, or if this company wanted to make a move, they should start soon. And what I mean by that, insiders could buy. They could use some cash if they have cash. We're going to take a look, make some acquisitions, all that fun stuff. They pay a 14% dividend. Is that sustainable? I don't know. Let's run our stock price projection. Before we do that, let's go down here. Sales are actually all over the place. EPS all over the place. No real clear story. Gross margins 100%. That's pretty incredible if it is true. Sales over the past 5 years have only gotten better. The stock is considered cheap. In the future, at this same guidance, sales margins, it is very cheap. They're very profitable. I'm really interested now. Okay. I meant to go here. All right. So we're going to just zero everything out really quick to remove any confusion. Okay. Market cap is 7,180,000,000. Yep. Income is 625 million. Sales, they do 2,890,000,000. Fantastico. Now this is where I'm a little nervous. Cash and debt. Let's see what they've got going on. They have 1.8 billion. It's not the most they've ever had. So they do have 1,873,000,000 total debt. 62 billion dollars. So this falls out of my typical range. That's insane. Total assets 71.8 billion, total liabilities 63 billion. So they do have a 7 point, they do have a $7 billion buffer essentially. I don't see any red flag activity down here. Looking at their income statement. So Q4 they lost money. They kind of seem all over the place. Let's if they do 1.64 times 4, they could do 6 billion this year in sales, which would be incredible. But we've got to stop our calculation because it's just negative and it doesn't fit. But we'll just entertain. We'll do 729,650,000. Negative stock price, no questions. I mean, yeah, we kind of saw that. Okay, what are institutions and hedge funds doing? Old data says they own 41%. New data says they own 41%. Not a change at a slight change. 41.32, now 41.73. A slight uptick. Vanguard added 16%. BlackRock added 12%. That's pretty big. Yeah, I mean, this is not something I would consider or entertain just because I don't I don't want to say it's gambling, but yeah. I mean, it is coming to a point where it's going to move up or down. And honestly, if they do have 6 billion in sales this year, this $9 this $9 stock price could be fantastic. And I think they do pay a dividend every month. So let's go to the daily really quick. Yeah, so 1, 2, 3, 4, 5, 6, 7. It's been 7 months so far this year, and they paid 7 dividends. Makes sense. So you're getting, let's say you have $100 in this stock. Um, you're gonna get $14.77 divided by 12. So each month you'll get $1.23. Is this, but my thought here is this a generational buying opportunity? Because the stock price has held really well above $7. There was the COVID reaction where the stock got down to 625. If you would have bought at 625 and received a 14% dividend for the last 4 years, and you're still up on the stock, I mean, hallelujah. But I don't like look at just the history of this stock price. It's gone up, down. Could this be an Elliott wave though? And what does that means is basically, let's go to the yearly. So Elliott wave is basically, watch my cursor here. 1, 2, 3, 4, 5. It kind of makes like a zigzag. Um, and basically the third leg is the largest move, meaning if this stock price here for 2024, if this is the true bottom right here, could it have an Elliott wave style move potentially? Or is it trading in this descending wedge and could we see it come down further? Those are risks we have to think about and thoughts you have to question. We are again 7 months into the year. We've had 1.4 billion shares traded, almost 1.5. Last year was 3.1 billion. The year before that was 2.9 billion. So we're not on pace to have a year where shares traded is more than the prior year. And I say that because we're more than halfway through the year and we're only at 1.47 billion shares. If we were thinking this was going to be a turnaround year, we would want to be at 1.5 or 1.6 billion. So then we have another 6 months of the same activity where it has a chance to, again, have more volume. Do they have earnings? Let's see, April 22nd. I want to see what they're guiding for this year. Um, and again, this is a stock that pays you a monthly dividend, but it's kind of a trap because it's really ever only gone down. Look at this though. Look at this volume shelf right here. This is very telling. This actually makes me believe there's some decent support. And I'm actually gonna draw. This is fantastic. Where'd it go? That is very telling. Let's see what they're. Oh, they're doing offerings, are they? That's unfortunate. And I apologize, they're increasing, they're adding more supply. Damn. Challenges remain for the second quarter. So they have mortgage-backed securities. What are the TBA? TBA. To be announced securities. So they have 8.4 billion they're gonna add to the float. I want to check their website out really quick. I want to see what their portfolio is. Just mortgage-backed securities. As of March 31st, leveraged ratio. Oh my gosh. So is there an expense to own this one? No, there's no expense. That's crazy. Other gain loss. Loss. Wow. And what were their assets and liabilities again? I think it was a $7 billion buffer. Yeah. It's been about 8 billion for a while. It went from 8 billion to 7 billion now. Is there guidance? No guidance. No full year. Okay. I just want to see what they're expecting for the rest of the year. Nope, nothing there. So basically, they're just swapping mortgage-backed securities. I'm gonna be jumping around really quick. I apologize if it's gonna get a little. Okay. So what I'm gonna do is see if Federico. Kane? Nope. Federico. Uh, no. Okay. No. Campbell. No. Bell. No. Okay. I just wanted to see if the insiders were being tracked there. Yeah, Zach's is just auto-generated. Okay. Let's look at. I guess the good thing about the mortgage-backed securities is it's a lot different than it was in 2008. Let's actually see what it did in 2008. Is that when it was $36? Excuse me. So basically, what I see so far is okay. Yeah. So 2012 was like the kind of the end of it was, so it was rising. Do I have it in here? Yes. So 2008, 2012, that's when the mortgage-backed security business was extremely speculative. Anybody could go out and buy a house. Basically, there were no standards on income, debt, really. I think of The Big Short, the movie, if you've ever seen The Big Short. People had two, three houses. They were just giving them away like hotcakes. Now we actually have pretty good standards. You have to have a certain level of income. The lending standards are tighter. Um, so actually, this seems decent, and I only say that because th it's funny. This huge shelf of institution, not well, I guess institutional retail ownership. So could it go down to six? Yes. Could it go lower? Maybe. It depends on the mortgage-backed security business. But I mean, if you bought this, let's even see. Unless you bought this in March of 2020 and potentially the beginning of April 2020, you're underwater. Or if you bought this in October 22, November 22, or October 23, November 23, you're basically underwater. And the only thing you're getting is a juicy dividend that to me doesn't smell sustainable. However, I mean, we have good mix of volume here. Institutions are actually the big institutions are actually adding a lot. I mean, holy cow. Oh my gosh. I'm just gonna do some quick math here really quick. So Vanguard owns 63,366,808 shares, and the stock price of AGNC is $9.75. And we times that by 0.14 divided by 12. Vanguard gets a monthly paycheck of 7.2 million for owning this, which is crazy. But at the same time, it depends when they bought it because their shares are losing value. So the risk reward here seems okay. I mean, if you're buying it at 9, but we've seen that this can get low as 6. Um, so just be very careful on this. It's not something I would buy if I was retired or wanting income. If you wanted speculative income, maybe. We could be getting to a point here where it's actually potentially maybe in a breakout state if they have good earnings. So they have the next earnings on, let's see. End of this month potentially. So yeah, again, this is our apex area. It could break up here, rejection, a lot of variables here. Again, could this be our consolidated long bottom? Sure. It's just only ever gone down, which is where I'm concerned. Not for myself, but for people who are investing in this. So just be cautious. Another strategy you could deploy, although you wouldn't really be reaping the rewards of the high dividend, is buying the stock and then reinvesting the dividends so you're continuing to dollar cost average at a good pace, but then those dividends you're getting as a paycheck are just going back into the stock to make sure you don't get too far underwater. So you got to weigh the risks and the rewards. To me, I think there's better opportunities, really. Um, yeah. Yeah. So if you made it this far, thank you so much for watching. Let me know your thoughts. I know a lot of people love this stock. It feels like a trap, honestly. It just feels like a trap. It's a beautiful dividend, you know. Um, so I'll let you guys be the judge, but if you're thinking of something, no, we're not even gonna go there. We're not even gonna talk speculative. Anyway, thank you so much for watching. Take care. If you're in this one, I really wish you the best of luck. I would love to see this have a multi-year breakout because the people who have been in this stock long deserve it. And it would actually decrease the dividend here to something more realistic, maybe like 8, 9, 10%. But that at that point, you're going to be kicking yourself in the behind like, oh, why didn't I get in at 9? Why didn't I get in at 7? So you are the master of your own finances. I will let you make the decision on this one. If you made it this far, consider subscribing. I really appreciate you. Have a great day.